Hello and welcome to Your Stocks live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Mehta, and on the show today we'll discuss all the stock queries that are sent by our viewers with our experts. Before we do that, let's take a look at the markets because continues to be a down day for the markets. It's a 120-point cut on the Nifty as we speak. We also have the mid caps which are down 0.9%, so there's a bigger fall that is coming by as well. But important comments coming in from the Chief Economic Advisor. He indicates that the government is not losing any sleep on rupee depreciation. They expect the rupee to make a comeback next year. Right now, these levels are not hurting, be it exporters or the inflation number as well. And the indication is that there could be some recovery in INR in the next year. That's, of course, an important comment coming in from the Chief Economic Advisor. We'll keep discussing this big story. And since then, we've seen some appreciation in rupee. The low today was 90.29, and now it has recovered from those levels, has come back to 90.14. So very, very important to track the rupee moves post this commentary, which is coming in from the Chief Economic Advisor, because that continues to remain the big story that we are tracking today. With that, let's move on, and we'll keep, of course, looking at rupee moves through the course of the show as well. But let's welcome in Somil Mehta, Head of Alternate Research, Capital Market Strategy at Mirae Asset Sharekhan, and Sneha Poddar, VP Research Wealth Management at Motilal Oswal Financial Services, to answer all your stock queries. Somil and Sneha, good afternoon. Thank you so much for joining in. So let's get it started. Nimish is writing to us from Pune, holds 4,000 shares of Restaurant Brands Asia at 64 rupees, asks if we can hold stock for another 6 months. Sneha, there's been a lot happening around the PE stake sale for Restaurant Brands Asia, a lot of other updates as well. Give us a sense of what Nimish should do with this stock.
Hi, good afternoon. So my suggestion to him would be he can probably monitor the stock from 1 to 2 quarters perspective. Basically, if we avoid this, the recent news flows around restaurant brands, overall from the business perspective, if we look, the Indian business is doing quite decently for them. It's largely even the Q2 numbers were quite decent, and it was largely driven by the store expansion and the healthy same store sales growth. But it's the Indonesian market which is causing trouble to them, and there, the management is taking a lot of efforts in terms of store rationalization and all. So over next 1 or 2 quarters, one needs to monitor whether the Indonesia business turns around or not, because the Indian business is the main focus area, and there the growth is happening. It's the Indonesian market which is playing a little pain in the overall profitability of the company. So my suggestion would be just monitor it for 1 or 2 more quarters, and if the Indonesian market doesn't turn around, then one needs to exit this stock.
Okay, so the stock can be held for next 6 months is your advice on this particular name. Sneha?
Yes.
Okay, all right. Somil, what about charts? How is this stock looking from that angle?
Good afternoon to everyone. My view is negative on the stock. It's been struggling below the 20 and 40 daily moving average. Since 2024 September, the stock has been trading below 200 daily moving average. Clearly, the trend is down in the medium term, in the short term, both. So I'll be expecting more, down levels like probably 56, 57 levels I'll be expecting on the stock. So clearly my strategy would be to exit from the stock and probably get into some other sectors.
Okay, some other sectors. We'll come back to that in just a bit, Somil, but let's get more stock specific. We have received a query from Winnie, who's writing to us from Goa, holds 1,000 shares of Mazagon Dock at 2,832 rupees a share, wants to know the outlook on the stock. Sneha, there was a point in time that these shipbuilding names did really well, but of course, from those high levels, there has been a sharp correction. Do you think we made a bottom here?
We can say so because, anyways, with the Putin visit in due course, and a lot of defense deals are likely to probably close at that point in time. I mean, it's just a profit booking which has taken place, and I believe, I mean, these are the good opportunities. One should actually accumulate such quality names, because when we look at Mazagon Dock, their order book is very strong, and even in terms of pipeline, if we talk about, there are few next generation submarines which were approved by the government recently, so it just needs to be concluded in the coming months. Even the Calvary submarine deal was approved by the government, which needs to be concluded. So the pipeline also shows that there's a lot of visibility in terms of revenue growth going ahead. So my take would be to actually take this as an opportunity to accumulate at lower levels, and if one needs to average it out, it can be done at these levels.
Okay, it can be done. It can be averaged out at these levels. What about you, Somil?
See, in the medium to long-term outlook, definitely positive. There's no doubt about it. A great channel pattern on the monthly and quarterly charts, and trading above the averages. But in the very short term, there's pain, and I would expect the stock to still continue the sell-off till 2500 or 2550. So in the very short term, there could be pain, but for medium to long term, I'm absolutely positive. 2500 would be a very good opportunity to buy the stock, and my targets would be much higher, above 3000, 3300.
Okay, above 3,300. So an upside from these levels. Let's go across to the next query. Krishnan is writing to us from Ahmedabad with an investment query. Asks if we can buy Sun TV shares at current levels. This time, let me go to you first up, Somil. The stock is lower, down 1.6% right now. But the media space in general has not done too well so far. Yes, there have been triggers, but that hasn't converted so much into stock price yet. But Sun TV, specifically at these levels, what is your take?
Sun TV again negative on the stock. Sorry about the media space, but negative on the stock. Since December 2024, the stock has been struggling below 200 daily moving average. Forming lower tops, lower bottom on the monthly charts, quarterly charts. Negative, absolutely. In the very short term, I'll be expecting the stock to go below 530. However, if the stock closes above 620 levels, which is very high, above 200 daily moving average, then probably there could be a medium term uptrend reversal. But at this point of time, negative, and I'll be expecting lower levels.
Okay, lower levels below 530 soon on Sun TV. Fundamentally, Sneha, what's your take on the space and a specific stock?
Sonal, even from my side, I mean, I would say better to avoid, because largely for these TV broadcasters, advertisement is the main source of revenue. And recently, if you've seen, the shift in the FMCG ad spend has been more towards the digital side rather than towards the the traditional TV broadcasters. So this really poses a big headwind for Sun TV. And secondly, the recent Star Viacom merger, even that poses a threat for players like Sun TV, because with the heightened competition for the ad revenue from these deep-pocketed players, obviously that will create a lot of pressure. And also there's a potential downward risk in terms of IPL media rights in the next renewable cycle. So keeping all these headwinds in mind, I mean, my suggestion would be to avoid such counters.
All right, so avoid Sun TV at current levels, or fundamentally and technically not looking so strong. Let's go to the next stock. Rahul Bakshi writes to us from Faridabad, holds 200 shares of Bharat Electronics at 140 rupees a share, wants to know the long-term prospects of the stock. Sneha, let me come to you for this one. What do you make of this particular name?
I see Bharat Electronics is one of our top picks, because we really like the leadership position of the company, and consistently the company has delivered in terms of earnings quarter after quarter. Their order book is very strong, which provides good revenue visibility, and even in terms of the pipeline, I mean, there's no dearth of order across Army, Navy, or Air Force you talk about. And one thing which really stands out, now the company is completely transitioning itself from just being an electronic supplier to the system level integrator. So
Okay, all right. Sneha, looks like there's a broken link, but Somil, can you come on this one?
Yeah, sure. BEL looks great to me in the long term, medium term. However, in the short term, as Mazagon Dock, same situation here. Short term looks a little difficult, and I'll be expecting the stock to go below probably 380, 370 level. So that would be a good buying opportunity for a long term investor, for a medium term investor. But in the very short term, my target should be around 380 levels, which is 200 daily exponential moving average.
All right, 280 in the near term. That's the level to watch out for BEL. I would request our guests to hold on. We have to slip into a short break. As we do that, here's some good news for our viewers. India's business news leader is now a click away, introducing CNBC TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen. Welcome back. You're still tuned into Your Stocks on CNBC TV18. We still have with us Somil Mehta of Mirae Asset Sharekhan and Sneha Poddar of Motilal Oswal Financial Services. They are here to answer all your stock queries. Let's start with the next one. Prabir Chaudhary writes to us from Chandigarh, holds 20 shares of KEC International at 890 rupees a share. He wants to know if should continue to hold or sell at current levels. Sneha, what's your take on this particular stock and generally the entire sector that KEC belongs to?
Okay. So basically, the capex is expected to pick up once again, post the elongated monsoon, and thus KEC from that angle should do well. Now, it is one of the strong players in the power T&D space, wherein a lot of investments are expected to happen, especially given the condition wherein there's the lot of investment is required with regards to the power is getting generated, but then because of the the choke which is there at the transmission level, so that needs to be addressed. At the grid level, there are a lot of issues that the overall sector is facing. So the pipeline for KEC International is looking quite strong in that sense. And the company in terms of overall balance sheet strength, in terms of profitability, is doing really good. So my take would be to hold on to KEC International from the long-term perspective.
Okay, all right. What about you, Somil?
My view is negative on this one. In the short term, yes, that could be a bounce, and there is a bounce in the last 3 days, and I'll be expecting this bounce to continue till 770. That will be a very, very crucial resistance from the stock. However, if you see monthly, weekly charts, there's all low top, low bottom formation trading below 200 daily moving average. Overall weak stock. I'll be expecting in the medium term outlook to stay around these levels and retest the previous swing lows of around 630. But in the short term, yes, there could be a bounce, and that would be an opportunity to exit the stock.
Okay, all right. That is about KEC International. By the way, JSW Steel, that stock should be on your radar. There's an update that was come by. JFE Steel, that company has agreed with JSW Steel, where JFE will be investing around 270 billion yen to transfer the integrated facility, that is the steel facility of Bhushan Power and Steel, to a 50-50 joint venture between JFE and JSW. This is an important update that has come by because remember, there's been a lot of to and fro when it comes to JSW Steel's acquisition of Bhushan Power, and now there's an update here where JSW Steel and JFE will be having a joint venture where there'll be a 50-50 partnership for transferring integrated steel facility of Bhushan Power and Steel to that joint venture. The stock has come off from the highs of the day. It is down around 1.2% as we speak. We'll get in Nigel in a bit as well to understand what this means for JSW Steel overall. But right now, looks like it's a 50-50 JV where 50% equity will be coming in from JSW Steel, 50% from JFE Steel, and the investment is about 270 billion yen. So what happens to the balance sheet? What the funding requirement will be, and where will JSW Steel be funding it from? All of that and a lot more. We'll get in reaction as well. Sneha, I don't know if you track it closely, but any word on what this update means for JSW Steel, if you can help us with that?
We do track JSW Steel, and what we believe is that in the long run, this would be beneficial for the company, as it would, it would help the company to rapidly expand its capacity. Overall, the metal sector is expected to revive. I mean, though the steel prices are under pressure currently, but then from the what we believe is that the metal sector will soon turn around, and the domestic demand is quite strong. Globally, the demand is expected to pick up once these global uncertainties do subside down. So, in general, when the demand picks up, the JSW Steel will be well placed to cater to this demand. And moreover, it is moving up the value chain. So, a lot of value-added products are there in JSW Steel product offering, which really makes the company stand out. So, what I believe is with the this acquisition finally seeing the light of the day, this will really add the feather to the company.
Okay, so the release also mentions, there's a release by JFE which indicates that right now BPSL or Bhushan Power owns an iron ore mine and integrated steelworks in eastern India with a crude steel production capacity of 4.5 million tons per year, and there's a potential to expand the capacity of this particular integrated facility to 15 million tons in the future to make it one of the largest integrated steel facilities in India. So this is an outlook that JFE has also given on what it would mean for the entire plant. They say they expect, of course, this is about their own company that they're talking about. They expect it to be profitable by fiscal 2035, but that's, of course, about JFE. We need to understand the impact that it would have on JSW Steel, because the stock has sharply come off from the highs of the day. It is at the day's low. It's a 2.5% downtick on this particular name. So we'll understand in greater detail what this would mean for JSW Steel, which has come off sharply from the highs of the day. We'll keep that story alive. Of course, we'll keep talking about that. But would like to thank our guests, Sneha and Somil, for joining us today and answering all the queries very patiently from a technical and fundamental viewpoint. But let's move on now. Amazon Web Services, the world's largest hyperscaler, has taken a giant leap in the ongoing AI race over its rivals Google and Microsoft. Ashmit Kumar visited the company's flagship summit, reInvent 2025 event. Here are the key takeaways from the event.
Well, the world's oldest, the largest hyperscaler in the world, Amazon Web Services, throwing the gauntlet to its competitors, the likes of Microsoft and Google, through some big announcements that we saw today at their day one of their flagship summit, reInvent 2025. Now, the markets, the industry was watching very carefully. What were we watching out for? Well, there are four things that caught our attention. Number one, the chips race. Now, hyperscalers like AWS are not happy just being hyperscalers. They also want to enter the chips race. AWS entered this race back in 2018, and today they released the latest version, their most powerful homegrown chip called the Trainium 3, which they believe is exponentially more powerful than previous generations, and it couldn't have been more timely since Google has been flexing with what their chips can do, which they've shown with Gemini 3. Not just this is not the end of the road. Matt Garman, their CEO, the AWS CEO, said that there are lots more work under the wraps, that as far as the next generation is concerned of chips, that will be Trainium 4, which will be exponentially more powerful than this version. And this, importantly, is a statement of intent by AWS that they want to enter an ecosystem which is on lockdown by NVIDIA, courtesy its powerful GPUs. That was one. The second, as far as the LLM race is concerned, this is clearly heating up. With Gemini being released by Google, we've seen the GPT versions released by OpenAI. Today, AWS released its Nova 2 generation of LLMs, which they say is significantly more powerful, can achieve higher benchmarks than even the likes of OpenAI as well as Google. And number three, data sovereignty impacts. A lot of countries are asking for their companies to store data locally, and AWS, the solution is what they call AI factories, where they move entire server racks to the location of the customer companies to meet any data sovereignty mandates. And finally, as far as AI agents is concerned, AWS releasing what they call our frontier agents, which can compress timelines for tasks which ordinarily would have taken months, and that this is something which can be done by AI agents working round the clock for days and weeks on end. So that's a quick wrap of 4 highlights that caught our attention.
All right. Thank you, Ashmit, for joining us with all those details. By the way, JSW Steel stock, it has sold off. It is down 4% at the day's low. It is on the back of the news that there's a joint venture between JFE and JSW Steel for Bhushan Power and Steel integrated facility. They also indicate that the steel production capacity of 4.5 million tons per year could be scaled up to 15 million tons in the future to make it one of the biggest integrated steel facilities in India. In a while, Nigel will also join in to make sense of this JV that has come by, to understand what led to that sharp sell-off in the stock as well. But of course, it is a CNBC-TV18 news break which has been confirmed as well. In fact, actually, let's do one thing. We do have Nigel in the studio joining us now to explain what's happening here. Nigel?
Well, it appears initially the street is a little bit disappointed maybe on the valuation front, because it appears, if you're valuing the company at 15,000 crores for around 50%, then it'll be around 30,000 crores odd. I think many on the street would have wanted to see that it getting valued a little bit more. That could be one part. And this, Yash has reported about it as well, and it's been in the works for the last many months. To put out a few details, Bhushan Power and Steel, the holding currently is JSW Steel has close to around 83% in this company, and 17% is with the promoter entity. So we'll have to look at what are the contours of the deal and how much JSW Steel will be getting as well. Because if the holding comes down from around 83% or then even the profitability, the contribution will come down by an equivalent amount as well. And what is the promoter holding post this? So I think a few unanswered questions. The reason that the stock could potentially be selling off, just to first look at it, is the valuation that is given is relatively lower. And what is the pending stake of JSW Steel in this Bhushan and Steel, Bhushan Power and Steel asset, because it's been turned around to a great extent. And the street, when we reported this itself, most analyst feedback was it should be valued at more than 30,000 crores. And back of an envelope suggests that actually it is around 30,000 crores or thereabouts. So that's just a brief take out there. Maybe the valuation at which this is done is relatively low. We'll wait by further details, and I'll be speaking to the management at around 4 p.m. later today. So all through the trading session, there was a lot of open interest built up, thinking that there is this deal that is in the works. From the morning, the word go itself, the buzz was that the deal is coming about. And now the deal is not as good as what the street anticipated, but it could be a knee-jerk reaction. We'll have to look at the detail in, the details in further, in the time to come. But as I said, Bhushan Power and Steel, the holding was JSW Steel had 83%, promoter entity had close to around 17%. So I'll get back with some further analysis. But first, it appears some profit taking, and secondly, maybe the valuation is a little bit lower. We'll come back with more.
Okay, we'll come back to you for more details on that. For now, there's a sharp recovery from the lows as well. The stock was down 4%, now it's down 2%. But further details, as Nigel mentioned, is something we'll get from the management in just a bit. But with that, we'll do one thing. We'll take your leave on this edition of Your Stocks. But do remember to email us your queries and we'll address them with our experts. Stay tuned for Closing Bell to take you through the last hour of trade.